We start. One important point for taxpayers to understand is that the change of law does not mean that past mistakes will disappear. If income has escaped assessment in earlier years, the department can still reopen those cases under the old act within the permitted time. Penalties and prosecutions of earlier years will also continue. In simple words, the new act will govern the future, but the past will continue to live under the old act para. Another practical question being asked is whether tax rates, deductions, and exemptions will change from 1st April 2026. As of now, the Act does not introduce major policy changes. The government has mainly rewritten the law in a simpler language and better structure. Therefore, most provisions relating to salary, house property, business income, capital gains, deductions, TDS, and return filing remain broadly similar. Taxpayers expecting major relief in tax rates may feel disappointed, but professionals may feel relieved that the basic structure has not been disturbed. Para. However, even if the provisions remain the same, the change in section numbers, terminology, and arrangement will require fresh understanding. For more than 60 years, taxpayers have become familiar with section numbers like 10, 24, 36, 43B, 54, 80C, 143, subsection 3, 147, 148, and many others. With the new act, all these numbers will change. In the initial years, both taxpayers and officers may find themselves searching for the correct section, like looking for an old address in a new city. Para. Another important impact will be on notices, forms, and return filing. New forms will have to be notified under the new act. Software systems, tax audit formats, TDS returns, and reporting utilities will also need modification. Considering the increasing use of technology, the transition will be both legal and technical para. Professionals will have an additional challenge for the next few years. They will have to handle cases under both the old act and the new act at the same time. One case may relate to tax year 2026 to 27 under the new act, while another case in the same office may relate to assessment year 2019 to 20 under the old act. This dual system will require extra care because applying the wrong provision may lead to serious consequences. Para. Taxpayers should therefore not assume that everything will become simple from 1st April 2026. The language of the law may have become simpler, but compliance will continue to remain strict. In fact, with increased digital monitoring, AIS reporting, and data matching, the department's ability to detect mistakes and data has become stronger than ever before. A simpler law does not mean a softer law. Para. In the coming weeks, we will discuss various aspects of the new Income Tax Act 2025 in detail, including the concept of tax year changes in different heads of income, new TDS structure, reassessment provisions, and increased powers of the department. Understanding these changes in advance will help taxpayers avoid confusion when new law actually comes into force. The new act may start from 1st April 2026, but its understanding must start from today.